Good Friday evening, folks. It is March 24th, 2023. I'm going to give you the wrap up for the week for precisealgorithmtrading.com. And this is Dave. So let's see. I'm going to start with the indexes and then show you the algorithmic trading, the auto trading system that we have. And so try to keep this simple, but a little, try to show you how the week is working out at least. So here's the S&P 500, the E-mini futures contract, um, and we got I'm going to call that a hammer candlestick today. And we got a doji looking thing yesterday that I talked about, and if you notice, it came pretty much, I mean, not down to the tick, but it came down to this diagonal line, this uh, descending trend line, or actually it's a descending wedge pattern. And so we'll see. And we, by the way, got a new buy arrow on the daily chart today on the S&P E-minis. I want to go look at the actual S&P 500, the SPX, in a second. But on the weekly chart over here, the last real signal we have is a buy signal, and that was 3 weeks ago. We are in red territory, but we are above zero on the indicator. So this is bullish. It stays bullish, at least on the way that I trade. And I pointed out this triangle pattern yesterday that I actually saw in a different newsletter from somebody else. If you read enough newsletters and share enough information with people, other people see some things that point them out to you, and I can use this in my trading. So that's the S&P 500. Still looking pretty bullish. And this indicator up at the top, where my crosshairs are, we're in March, but we're going into April, and 90% of the time over the last 10 years, because I got 10 years worth of data on this, that's here, time frame, 10 years day, that's what I got. So over the last 10 years, 90% of the time in April, the average, the S&P 500 goes up by 1.86%. That's all that's telling you is that's what the market has done. That doesn't mean it's gonna do that, but it does give you a 90% probability. And then in May, a follow up to that would be, over the same 10-year period, 80% of the time it goes up by 1.05% on average. So can you set your clock by it? No, but it can give you a guide. So let's look at the Dow, because it was the laggard, and it's a hammer candlestick. Throws in new buy targets up here. We got targets the other day. These green dots are targets, and we don't have a new buy signal on the daily True Momo indicator. That True Momo indicator is really, it's true momentum with our own settings, and we've put in some other indications. We've got the real buy arrows are the green and the red arrows. The yellow and the dark blue are really just indications of where the buying or selling pressure might be coming in. And then the dots are just the Bollinger Band squeeze, and that's the Bollinger Bands and the Keltner channels. It's a common, well-known indicator. By the way, I also threw the Bollinger Bands on the charts for our daily analysis, and basically they're like volatility bands. When the price presses up against them, it either has to break and they have to continue higher, or they bounce off of them and come lower. And you can see, like, to the downside here on the Dow, they broke to the downside, pulled down for a while. These little white arrows show up, and those are when the price closed below the Bollinger Bands in one day and then closed above the Bollinger Bands the next day. And I think that gives you it gives you a point where the price might come back to the mean or the average. And then, all it is a guide of where price might go. So I didn't throw them onto the weekly chart because I think it's too much noise. But anyway, so the Dow it's perking up. It is in a downward wedge pattern or megaphone pattern, and those tend to break to the upside. And once we get the break to the upside, I think we should see some pretty serious bullishness, because I think everybody's expecting the market to go lower with all this bank noise and everything else. I think that's what happened today, and I mentioned it yesterday. At midday today, when markets were down hard, that's hard to take if you're in long positions, and I tend to just try to go do something else and come back and see what it's doing toward the end of the day. And I don't really make decisions on what I'm going to do besides do some intraday buying. I don't do selling until we actually get full signals, and I set those sells for the evening. So I haven't gone through my positions personally for the weekend, but I'm assuming that not very much is going to sell out. Now, I'm only giving you an indication of the overall markets. I stopped really giving the daily review on the individual positions because I really want to focus on the automatic algorithm trading, which I'll get to. But I want to just kind of show you all what can be done here, and we do have the indicators on the site. We have some that we're selling right now, but I'm also going to probably put some free things on there, and I'm also going to give you some how we trade these things. Again, just like everything else with the disclaimers, there's nothing set in stone here. These are just the way we trade. So I can give you probabilities, and I can give you math behind a lot of things, which is also neat. So anyways, that's the Dow, and I'll stop talking about that. Here's the NASDAQ, which has been breaking out to the upside. This is a classic dish pattern, or I've heard them called spoons. So anyways, we're typically, I'm not going to draw it on here. Well, I can draw it on here. So if I take a line tool like this, and I go from the bottom of the low to the top of the middle here, where price is basically gone as high as it can there, and then you take that same line and you duplicate it, and then you drag it up. I am going to mess up my charts when I do this, but if I drag this side down, it actually shows the potential for where this market can go. So if the NASDAQ gets to 14,146 over 12,922 right now, that's a pretty serious gain. I'd have to grab a calculator to do the math, but that is the potential, and it happens to be right in line with this. I think that's 2 standard deviations out next week. Will we see that next week? No, I don't think so. I think it's going to take a few weeks to get there. And we got target dots back here along the way on the left-hand side, which substantiate that type of price action. I'm going to leave that on here and see how it plays out, and we can talk about it day to day as it goes forward. So that's the NASDAQ futures, and then the Russell. Same. It's hammering out a bottom, it looks like, but we'll see. We don't have a buy signal, and we've got still selling pressure on the weekly. The transports, same kind of thing, really more selling pressure, although we're still pretty bullish on the weekly. This thing could reverse and be, if this thing starts going higher and the industrials go higher, then that's a pretty good recipe for higher pricing. And you guys might wonder why I talk about higher prices so much. The stock market has a bias to the upside, so I'm well aware of that, and that doesn't mean I don't short things every now and then, but the tendency is for things to get long eventually. Um, short-term price action to the downside usually doesn't last long in the scheme of things. So oil, actually, let's go back to, so here's the S&P 500 contract itself, the SPX, and this is really without the overnight action. So prices tend to they don't gap, or I should say they do gap, and they show gaps, and with all the other lines I got on here, it's hard to see, but there's none of the stuff that happens overnight. It doesn't show up here, so it's a little bit cleaner chart. Although you can also see it does not have a buy signal on the actual SPX. It's only on the E-mini futures contract, and that's because of, I'm guessing, because of overnight action. After market today, we had 15 minutes of trading after 4 o'clock when the market closed in the S&P 500 and the E-minis, and it looks like it got more buying, which it's probable to me that that's what created that arrow to pop up. And let me show you this one because I've shown it before. This is the E-mini futures contract, and I actually turned off the overnight price action. So this looks an awful lot like the S&P 500. These are McClellan oscillators, and I pointed this out when these were really deep buried here, that we were expecting a reversal. We got it, pulled back here. We still, the next time it gets to where it's really dangerous for a down move is once this thing crosses back up into the upper territory like it did back in January, and starts to roll over. Although it actually went up from there, but when it starts to roll over and break that red line of 60 is where we started to fall off. So once we start crossing this zero line is when things get funky both directions. So I think that's an interesting thing to watch. This also happens to show my diagonal support and resistance lines as far as the triangle pattern. So then oil, let's look at the oil contract for futures, and it looked pretty miserable during the middle of the day. I'm actually long this thing from basically it got way oversold, and I decided to buy in off of some other signals that I don't really get into on this site. But it actually pulled back up nicely, and the actual oil USO contract, we'll see if it hammers out a bottom here. I mean, I think we got the bottom a few days ago, and now this thing's got to just get the true Momo indicator needs to get a nice buy signal here, and we could get back, I'm assuming, into this range where price used to be. In fact, I'm going to put an alert up here, and if it hits around there, then I might think about getting my money back out. So that's that. I'm going to leave that there, and then we're going to pop over and look at stockcharts.com, the bullish percent indexes, which we go in here and do this, type in bullish, and we get the industrials, which are flat today, the NYA, which is minus 3.15% today. If you recall, I think yesterday these were pretty bullish. The transports, minus 16.67%. That's pretty bearish. We'll see see what happens Monday. We could get a big down move and then see what happens. We could get maybe some capitulation here at this. But that hammer candlestick really sticks out to me on the markets, on the indexes, because of course sometimes, because everybody knows what a hammer is, the market will pull you into one, so everybody loses faith in that before it takes off to the upside. It could take a day or two to play out. Yeah, was that the NASDAQ? I think it was. No, the NASDAQ's down 2.71%. The SPX It's the S&P 500 down 5.26%. Fairly bearish internals today, even though they're on they're columns of X's, so they're on temporary short-term bullishness. Here's the NDX, pulled down by 7%. No, thank you. And then we'll look at the OEX, which I'm assuming is going to look similar. And a column of X's with zero change today. That's interesting. All right, and then the automatic trading, which we're really here for. So these things trade automatically through the day. Really, you just got to make sure that they're on before trading starts. And I tend to turn them on and turn them off every day, so it kind of checks the position, clears the account. Anyways, this is the Russell 2000 contract, and this is the quarterly, and it looks terrible, which I've been talking about for a while, but we're starting to maybe stabilize here. This is our actual equity curve. That means how much money we have in our account, and it's been going down a little bit this quarter for the Russell 2000. I've got 3 positions on purposely to have diversification amongst the different, basically inside my account. I want, sometimes the Russell can be going up and then maybe the Dow's going down and vice versa, and they can either offset each other and they can augment each other when things are going well. Here is a list of the most recent trades in the Russell 2000, and you can see we've got some pretty bearish stuff going on back here. We start to pick up some winners here. These are literally winners and losers as far as when this thing's taking signals. Then we got a series of a couple of losers, and we got a few winners and some other losers, and looks like the last trade of today was bullish for the Russell. And then this is what it looks like on a 6-month chart, which, if you see that little piece right there, was the piece that we were talking about when we're talking about the quarterly contract, because this is showing 6 months, so 2 quarters. All right, and then this is the NASDAQ, which was perking up pretty good. We got these green dots that are going on up here, or equity highs in our equity, our account value, and we've had some sell-off here today and yesterday, it looks like. So, you know, there's nothing fun about that, but you got to sit on your hands and just let it do its thing. So we're having some, this is the recent stuff since the 22nd, so a couple days. And, you know, we've got some, again, I've talked about this before, but smaller losers, bigger winners, smaller loser, bigger winner, smaller loser, still small, you know, these are equal, but that's a pretty big loser right there. And that's a pretty big loser right there, but you know, I guarantee I can go back in history on these things, and they've got some $5,000 and $8,000 winners too. So, and this is on a $300,000 account. You know, if you're working with a $30,000 account, it'd be a tenth of this. If you're working with a $3 million account, we might be wanting to talk about some more diversification or some just much larger positions. So. And then this is what it looks like on a 6-month basis. So this is that sell-off here recently that's a little hard to take, hard to swallow, but it is what it is. Obviously, it's a nice uptrending equity curve. So, and then here's the Dow. It was starting to perk up, especially, well, back here. Now it's selling back off to where it was, and I'm hoping we get some more bullishness coming in. And I shouldn't say bullishness, some more winning coming in here. And if you look at this on the last few trades, you know, over the 24th, the 23rd, and the 22nd, it trades a lot more, but you know, it's also got some smaller positions. I mean, they don't, so we're winning 1,500 here, but we're, you know, there's a big one, big negative of 3,200, but you get, you know, the back and forth here is Um, this thing's set up for, like, when it breaks certain rules, then it trades back out of a signal. So hope if you don't understand that, I can certainly get into it at different times. And then this is what it looks like on a 6-month basis. And we've had a lot of, if you look at the individual trades, there's a lot of individual trading going on, chop back and forth here. But again, it's really, we got to fill in this gap. Well, the gap's a little wider now, and we want to pick up and have our equity start to pick up like that. Do I expect that to happen? Yes, I do. Based on the math and everything that goes into this thing, I expect it. Can I guarantee it? Absolutely not. And so that's it. I hope everybody has a great weekend, and this is Dave, over and out.